Well, in the banking sector, if you're big, then you have an advantage. And that is forcing banks in Kenya to rethink their strategies. One of them is merging. Case in point, NCBA, a merger between NIC Bank and CBA. And today we will be having a conversation with the top guy in NCBA to find out much more on mergers. But right now we start with his profile.
John Gachora was named the Group Managing Director of NCBA Bank in May 2019 as part of the merger of NIC and CBA Bank, which was first announced in December 2018. Mr. Gachora has extensive experience in the banking sector, having worked in Kenya, South Africa and the United States. He joined NIC Bank in September 2013 as the Group Managing Director and an executive member of the board. Prior to this, he held several executive positions at Absa Bank in South Africa, including CEO of Absa Africa and Head of Investment Banking, Sub-Saharan Africa, as well as the Managing Director and Head of Corporate and Investment Banking in Barclays Africa. Before moving to South Africa, he spent close to 15 years in the United States, where he held several positions in the American banking industry, including in Bank of America and Credit Suisse First Boston. While at Bank of America, he rose through the ranks to become a managing director and head of the financial engineering team. Mr. Gachora holds a master's degree in electrical engineering and computer science from the Massachusetts Institute of Technology, MIT, USA, as well as an MBA from the Wharton School, University of Pennsylvania, USA.
Thank you very much to the show. Welcome.
Thank you, Noah.
All right. So the first question, of course, it's a year down the line after the merger. And the common question is always, how has been the journey 1 year down the line after this so-called marriage of NIC Bank and CBA?
You know, it's both exciting, very exciting. As you know, the first year of marriage, we call it honeymoon in real life. So it's quite exciting, but also challenging, because the first year of marriage, you're bringing two cultures together. People do things quite differently, and you're trying to put all that together to create a new home, if you may. So it's been 1 year of a lot of hard work, I must say. As you know, when we merged in October of last year, the merger was completed from a legal and regulatory perspective, at least in Kenya. We still had the other countries to do that, and we finalized our merger in Uganda in June and in Tanzania in July. And that's also a lot of work. Even though there may be smaller banks, the process is exactly the same. Mm-hmm. And here in Kenya, it's a lot of integrating people, integrating systems. As you may have seen, we are doing quite a bit of work now to integrate our systems.
Definitely.
Yes.
Quite some work to be put right there. You're bringing together two strong institutions, to say the least.
Yes.
NIC Bank, quite a strong institution, CBA Bank. Yep. Bringing this together, what are some of the nitty-gritties that goes behind merging such institutions, and what are the benefits accrued to that?
So you know, mergers happen for a number of reasons, but I think the common reasons are you're bringing together to gain market share, to gain scale, to be able to make more investments. You're bringing banks together to gain certain capabilities. As you know, CBA was well known for wealth banking. That's what they are known for. And also digital banking. And certainly NIC was known for asset finance and also a lot of what we call retail digital banking. So we're gaining capabilities, we're gaining market share. And I think the results are there. If you look at the point where we came together to where we are now, we have increased our market share, at least in Kenya, that has gone up. In the other countries where we are, we have gained a bit more scale, moved up a few places in terms of rankings. And I think the skill we have gained and people capabilities, we're able to make a lot more investments. Now, that is what we have gained. But what are the nuances of doing all that? Is obviously there's an element of, first of all, the shareholders have to agree. I think that's the first place. Mm-hmm. After the boards agree and recommend to shareholders, the shareholders have to agree. So that's a process to get them to agree. Mm-hmm. The regulators have to agree. Mm-hmm. That's a process. But I think the biggest stakeholder in all this is the customer, because the customer will be disrupted. Mm-hmm. inevitably when you bring these products together, there are a number of things you must do. One, you must harmonize, for example, tariffs. The smallest thing, you know, you go and you get a checkbook and you pay X. That X that you pay in one bank is not what you pay in another bank. But now you create one bank called NCBA, you must harmonize.
Yes.
And that's a change for the customer. Customers don't like changes. Yeah.
Now coming to the numbers, yeah. We have your half year of 2020
Yes.
Compared to 2019.
Yes.
And, you know, you go up from 2.4 billion, you know, in net earnings to 2.6 billion.
Yes.
And, you know, this is first half of 2020.
Yes.
This is where we've experienced a pandemic.
Yes.
And somebody asked to put everything into perspective.
Yes.
For a bank to be profitable,
Yep.
as you going up a few points, what goes into that?
Well, a lot of things. I would say our first, I guess, June marked June marked about nine months of operating as one unit NCBA. So if I look at this year, even before you go to the net profit, I think where you'll see the actual effect of the merger is what I call operating profit and operating income. At that level, we brought two banks together to create NCBA. What you expect is that you will either double or at least be 1 + 1 = 2 or more, right? I think the good and encouraging fact is that at that level, that actually happened. So if you look at our net operating profit before provisions, we were up 115%. So we more than doubled. If you look at our what I call operating income, we were up 97%. So again, almost double. Whereas for the banking industry generally, it was down. Yeah, so which means that we brought these two banks together. The staff came together and they continued serving our customers in a way where our overall performance actually went up.
Technology.
Yes.
Which is quite sensitive because, you know, we speak about customer being king, and the current customer is very tech savvy. They want things to happen on the flick,
Yes.
just like that.
Yes.
And you look at some of these challenges, and this is overall the banking sector. What are some of these technological challenges, and how can we, you know, bridge that gap as soon as possible?
No, I'm glad you asked that, and please allow me to explain in as simple a way as I can. Banks, at the core of the bank is what you call the core banking system. That is where all the customer data lies, your loans, your deposits, that's the core. That is where, from the core banking system is where we know Noah has X amount of money in the bank. We are not actually holding the cash, yeah, as you know. But that is where it's not all electronic money. So that is like the gospel as far as banking is concerned. Yeah? Most banks, big banks, this is a reality. When they merge, yeah, they don't merge their core banking systems because it's a very delicate and difficult process. Yeah, so what they do is they keep them separate and they build what is called middleware above it, yeah, so that through middleware you can communicate. Now, that takes a lot of time to get it to work efficiently. We took the gamble to bring the core banking systems together, yeah, as two very large banks. And that surprisingly worked very well. Okay, that worked actually very well. But there's another level to all this bringing together, which is a comment you made, which is that today's customer communicates to us through mobile and digital. That's the way they talk to us for the most part. Now, that journey from the customer to the core involves a lot of steps. You know, you have your phone. You have an app on your phone. You go through maybe Safaricom or Airtel or whoever else you go through. Yeah, that's another layer. You go through another layer, which is called the authentication layer, to say that it's you, isn't it? And then once you go through there, there's another layer we call channel manager that then speaks to the core and says, yes, we have verified this is Noah. He wants to know his balance. Now core, tell us his balance. Then it comes back to you and tells you your balance is X. Yeah? Now, through that, what I just described, you went through 4 layers, which are not necessarily bank controlled. Yeah?
Yes.
But you see, it must all work at all times. But to you as a customer, when your app fails, who do you think has failed?
The bank.
The bank. So the problem could be anywhere in these 4. So I think what we have seen, and not to blame anybody else, it's our fault, yeah, is that our core banking system integration went extremely well. Extremely well. And that is why from Monday, the day after we said we were doing this, if you went to the branches, you got served excellently. There were no issues. Because at the branch, they work directly with the core banking system. So that works like a charm. What I would like to assure customers is two things. The core banking system integration, a success. If you go to our branches, you'll be served like a charm. Everything is fine. Yeah?
Yes.
What we have is these intermediary connectivities that have been a bit challenging, and those will be fixed. Absolutely.
Definitely.
Yeah.
Some work going in right there.
Yes.
And you know, you've spoken about going to the branches. Part of your plan for the year 2020 was to, you know, to solidify the brand NCBA.
Yes.
And you're supposed to open 15 branches. Of course, COVID happened. You had to scale that down.
Yes.
But overall in the banking sector, what is the importance of, you know, physical branches, brick and mortar branches? Because everyone is running, let's go digital. You can save on rent and whatnot. So tell me, what's the importance of having the physical branch?
You know, an interesting, that question always comes up, when we do strategy and what you're going to do. But, you know, we ran surveys after surveys with customers and non-customers. And we asked them, what do you need to be convinced to open an account with a bank? And on the top 3 answers is always, I know where the branch is. Top 3. I know where the branch is. It's true, once they open, especially the millennials, once they open the account, they may never visit the branch. But they will not open the account unless they know where the branches are. I think what will happen, we believe, is that the use of the branch changes from being a service point to being a sales point. So the branches that would be opening would be more focused on sales as opposed to focused on service, because service has become self-service.
Yes.
So it's sales and advisory. Those are the 2 areas we think the branches are for, and that's what we're going to be building. So for us, we're still on the plan, got the plan to open many more branches. They will be more focused on sales and advisory, and therefore they don't have to be these large branches as we have seen before. They will be much smaller branches.
Definitely. And one of the fun facts is normally about banks. Is in many of these branches they don't even have washrooms, and we give you your money to place for us, you know. But that is a discussion for another day, another platform. Let's talk about a little bit back into the numbers. You've spoken about branches being a sales point. And you know, banks are a key component of the ecosystem, especially in any economy. Right now we are talking COVID has disrupted a lot. Businesses, there is the issue of credit, and seeing even in your performance, we are seeing, you know, the rise in non-performing loans again, because a lot of, you know, people that you've lent to cannot pay back. So in this ecosystem, especially moving forward from now, what do you expect from the banking sector and even to be specific, NCBA, in terms of advancing credit to those in need?
Look, I think banks have proven over and over in this country, and actually beyond, that their job is only done if they're lending money. Over and over. And they also prefer to lend money to the private sector because they believe they're the engine of the economy. So I don't think that position changes. I think you saw that when we had the rate cap regime, we continued lending. When it went away, we continued lending. Here we are in COVID, we are still lending and extending maturities for our customers. So I think even going forward, that's going to be the theme. That supporting your customer is important.
Definitely. And as we wrap up briefly, credit, you know, guarantee scheme is coming into play actually this month, for the SMEs. From the bank's perspective, what does this mean for you?
No, I think we've been asking for it because at the end of the day, we lend depositors money. we don't want to lose that money. Yeah? Depositors must get their money back. And for that reason, to your earlier point of saying, do we want to continue lending? We do want to continue lending.
Yes.
Yeah. So what we have said is, look, to ensure that we continue lending and we continue to maintain the safety of depositors' money, we need help here. And I think that's where the credit guarantee scheme comes in. As you note rightly, during COVID, risks have been elevated. Yeah, there are businesses that, if they come to you for money, you say, I know last year I was willing to lend you, today things have changed. Yeah?
Yes.
So it's those businesses that in the long term they will recover, but in the short term they'll go through a lot of pain that I think the credit guarantee scheme is supposed to help support.
Yes, definitely.
Unnecessary.
Yes, this has been a nice chat, even as you transition from the honeymoon stage, as you call it, of this merger. We wish you all the best. As you say, customer is king, and hopefully they continue enjoying your house.
Customer is king, and as I end, as you know, I want to take the opportunity to also really thank our customers because they have stood with us for this year. A difficult year it has been for them, a lot of transition for them through the journey. I know we have let them down here and there, but there are some who have stuck with us because we have been there for them before, and we continue to be there for them. Definitely. So I want to take this opportunity to really thank our customers for sticking with us.
Definitely. Thank you very much, Mr. Gachora.
Thank you, Noah.
All right, so there you have it. Matters mergers, the complexity behind mergers, but also emerging like a phoenix out of the challenges is what NCBA is doing. At this particular moment, I'm going to take a look at the markets.
When the bell goes, it means it's time for the markets, and I'm joined by Kevin Gigi, Jengis Capital. He's the equities trading and research analyst, and he's here today to help us with the numbers. And right after that, we're going to have a session on the Markets 101, and of course, get your questions answered as well. Many thanks for joining us, Kevin.
Most welcome.
Absolutely. And I want to start by a quick look at the season, COVID-19, and how is the market doing? What are your general comments so far?
We've come through a rough patch. I think we're better off now. Investors are more settled compared to when we started, probably around March and February. So the biggest concern right now for guys, it's now around elections and not around COVID anymore. We've sort of found timelines of how, when, and where we're going to get the vaccines. So the markets have sort of gone through those turmoils and we're at a better place right now.
Speaking of which, the market's activity, I don't know, what's your comment on it? Low, high, how has it been?
It's been a roller coaster. So we have weeks of highs, weeks of lows. If you look week on week, I think we're down, especially on some of the blue chips. Our biggest, of course, company, Safaricom, has been sort of stable. If you look at most of the banks, there are no show, probably because, again, the biggest investors or the ones who buy most on the blue chips are the foreign investors who are now shying away from the markets based by what's going on. You've seen the Trump and COVID. He's just been released. So it's just been a roller coaster and a place of, it's time to wait and watch. Yes.
Oh, interesting about Trump and COVID. Speaking of which, now looking at it generally, is this whole aura of the elections as well affecting the movement?
It is for sure. When you look at frontier markets, which is where we fall, and broadly when you look at emerging markets, they're predominantly owned by the developed markets. For instance, our market is 85% owned by the foreigners. So when you have a time when the first thing you hear in the morning is the president of the United States has COVID-19, and in less than 40 days you have an election coming, it's time to park your cash where the risk is less. Where we have, the least risk here. And what that means is you cut off your frontier, you cut off some of your emerging, and you park your cash at developing. And that's why you see, when you look at our blue chips, you look at your KCB, your equities, your Safaricom, it's either there's no movement or they're losing.
Okay,
Yeah.
interesting there, and
Yeah.
good observation as well. Let's talk about the index. Seems like there's still no movement as well. I think that's the same cause.
Yeah, I mean, if you're looking at the all share, which is a weighted of all the companies, I think we have 62 companies here. I bet having some of the stocks that have had positive news over the last, say, couple of days. For instance, Jubilee, you've seen that, and the partnership with Allianz.
Yeah.
And it jumped 24%.
Yeah.
Despite that big boost, it's
Yeah.
not a big. It doesn't have a big weighting on the all share.
Yeah,
As such, you see
Yeah.
such a big spike here.
Okay.
When you look at the NSE 20, which is more or less the top 20 best stocks, you'll see a bit of a slight movement, but not anything to book as significant here.
Yeah. Speaking of which, Jubilee Holdings is on the top gainers.
Correct.
You can allude that to the partnership with Allianz?
Definitely.
Okay.
Yeah,
great.
I mean, Allianz is one of the biggest company in the world.
Okay.
In terms of insurance and asset management. The deal was north of 100 million USD.
Okay.
So, and it covers a partnership over 5 countries, 5 East African countries.
Okay.
And the beauty of this is that Jubilee retains its key assets in these countries. It's not sharing, it spoils.
Okay.
So, however you look at this, it's a win-win for Jubilee.
All right.
Yeah.
Okay.
And
so
I think
even for the shareholders as well.
Correct, for the shareholders ultimately.
Okay.
Yeah.
Great. Talking about the losers, I'm looking at the only blue chip company I'm seeing EABL there. Yet booze was opened up. I don't know why. What we can accredit this to?
I mean, EABL has been hard hit since Feb.
Yeah.
Definitely by these Corona times. Their best days, speaking to management, they'll tell you are between Thursdays and Saturday and Sundays. You know, all the way.
That's the weekend.
So yes, the weekend basically. It starts from
Okay,
Thursday.
okay.
So once that was cut, and you know, it's only until recently that we opened clubs formally.
Yeah.
Once that was cut, it was a big hit for them because it meant they could only rake in from takeaway bottles. You understand?
Okay.
So the costs and the sales were not really matching up, and as such, they've suffered significantly. But I think times are getting better for them. You know, at least it's been semi-opened.
Okay.
So I think we should see some significant ticks.
Okay.
Yeah.
We hope that. I saw a report sometimes on some
Correct.
of the bars saying they're not going to open again, but
Correct.
we are really hopeful that it will come back to operation. All right, Kevin, many thanks for that look of the markets. Right now we get into Markets 101, and I want to put Kevin on the spot. And this is my question, because we really want to let the people know that this market is open for everybody. I want to ask you this question. How much should one have to invest in the capital markets?
It's an interesting question. I think it's a question I've been asked over, and it never gets old, yeah?
Yeah.
And my obvious answer, I mean, the answer at my fingertips is very simple. It's like a bank account nowadays. You know, how much do you need to open a bank account in any of the local banks? It's as simple as walking in with your identification and opening one.
Yeah.
So opening a CDS account is as simple as that. You just walk in with your identification documents, you open a CDS, and you can start putting in from as little as a shilling to as much as you know, 1 million, 10 million for you, you know. There's no limit. Yeah. So
Thanks for the hopes.
yeah, you don't need, there's no fixed, you only need a fixed amount when you're thinking buying a fixed maybe number of shares. So you want 100 shares of Safaricom,
Okay.
retailing at 30 shillings. So it means how much do you need? You need 3,000. Then you can put in 3,000.
So what
But
you're
then
saying, whatever I have, I can start.
wherever you have, you can buy. You can buy from the odd lot board, which is as simple as 1 share.
Okay.
You can buy on the normal board.
Okay.
Again, for you, 1 million shares, yeah.
Absolutely.
Yep.
And the fact that now we have the applications, the NSE app and all, they have made this very easy.
Correct, you can do it from home.
Many thanks, Kevin. And time now for your questions. And it's probably the most favorite part, because you get to have answers to anything that you may have about the capital markets, and we try to answer it to precision. And the question is coming from Noni Mothoni on Twitter, and she's asking, what should you consider to buy during this season? And I think she's asking about a season, this season of COVID-19. Could be a dry one.
Again, it's a very popular question from most investors, yeah? Not just novice, even the most sophisticated investors asking the same question, what do we buy during these times of all the uncertainty? And I think one thing we've learned from history is during times of turmoil is you go for the lowest risk, and if you can do it, the highest reward. It will not normally or as always much, but I think for us right now is to make sure your cash is safe, or your assets are safe, or they're the safest there is. And for me, that goes to bonds.
Okay.
Yeah, I mean, park your cash in bonds. I mean, they're guaranteed by the sovereign, the state.
That's a sure buy.
That's a sure, yeah, correct.
Okay.
So yeah.
So Noni, think bonds. I think you're hopefully well answered on that. Right now, we move on to the historical fact for this week. So many thanks, Kevin, for coming and helping us with the numbers.
Thanks for your time.
All right. And to our viewers, remember you can always give us your feedback on our social media handles appearing at the bottom end of your screen. Hoping that you had an insightful session with the NCBA CEO. For us here, it's bye-bye. See you next time, same place on the Trading Bell Show.